right, what's up, guys? Welcome, everyone. So I see we got some live viewers. Welcome. Let's see. I'm just gonna make sure that this is actually not public on YouTube, so it's privately for you guys, which it seems as it is, it's unlisted on YouTube. So please don't share around the link, obviously, because it's for you guys, the members. So you might be I'm standing up, which is pretty cool. So I have this new standing desk, which is just awesome. Share my screen here. Check this out. It's pretty cool. It's a pretty nice setup here. I like it. I really love the idea of having a second camera. I think it's pretty cool. But I guess you want to look at the charts. So let's start with that. I want to do a start out with a market update. So. And of course, if you have any questions, any questions at all about any whatever, anything that I'm talking about or the system or whatever, what's up, Odin's son, which is that Loki is Odin's son, right? And Thor, isn't Thor Odin's son as well? Loki and Thor is brothers. I don't know which one of you is it. I God damn, I gotta Google that. I'm so bad. I just read about this. Please do not tell me. It's a lot of sons. Did he have a lot of sons? You thought I would be taller. I am quite tall. How you? I look. I can't even touch the ceiling. Dude, yeah. I actually have a tattoo of the Tur rune, which is the god of honor. But you would like that. All right. Let's do this. I'm really tired. Like I've spent way too much time setting up the desktop earlier, and when yesterday when I had it all set up, of course I had to plug in the computer and everything. And then when I had that plug in, obviously I had to try it out. And when I was trying it, I got stuck. It happens. I had no idea where I went to bed. Way too late. So today we had, coming out of the euro area, we had the GDP rate. Now, like the fundamentals here is, I'm not really tracking the fundamentals that very carefully, right? It's a good idea to just take a look at the news to get a feeling for the risk sentiment. And basically, like I said, are we in a risk on scenario, or is it a risk off scenario? And by basically we can look at the dollar currency. Yeah, you can look at the dollar currency index, and it's basically crashing. I mean, if this would be like the Bitcoin chart, you would say that the bull run is over, right? This would be like the headline news would be like the Bitcoin crash. Like it's really moving down here. So I still feel like the risk on sentiment and let me kind of break this down for anyone that isn't aware of the current macroeconomic situation. And I know a lot of you are mostly crypto traders, right? Because I come from the crypto world. I started with crypto. My first investment was not the first investment, but when I actually started getting involved with trading was through the world of crypto, right? And then I slowly started transitioning over to Forex. And I know that most of you are looking at the crypto markets and only trading crypto market and investing in stuff like that. So you might not have a very good idea of the macroeconomics, but it's very it's important to understand that Bitcoin now, with the institutional interest that we've seen over the course of, I'd say, 2 or 3 years, has basically created a scenario where Bitcoin is very closely tied to the major institutions, and is definitely very much now a risk assets, and it is moving in correlation with the S&P 500, the stock market in the US, and of course then whatever the S&P 500 does kind of leads the way to the rest of the world's stock markets, and Bitcoin is a risk asset. It's like stocks are risk assets. Now, the US dollar is a safe haven asset, right? So when the market is in a risk off scenario, basically what risk off means is, let's say you have a group of investors, right? You have a group of investors, 10 investors, and they feel confident that the market is strong. They feel confident that the price of Bitcoin, the stock market, etc., will go up. So they risk they take their USD. So let's talk about American investors. They take their USD and they move it into assets like Bitcoin, stocks, and stuff like that, right? Now, when that happens, the strength of the dollar, the trend of the dollar, and you see right here, the dollar currency index goes down because people are taking money out of the safe haven risk off assets and putting it into riskier assets, which is risk on assets. And when that happens, you go into risk on scenario, right? So when people are taking money out of the stock market and out of Bitcoin and out of risk assets, you have a risk off. It means that the group of investors that we're talking about, they switch that. It's like a light switch. They switch it on and off. And you have at the bottom, you have, I think it's to the downside. At the bottom, you have risk off. Right? You switch that light switch, it's off, and then at the bottom you have on. So right now that switch is turned to on. As you can see, money is flowing out of the USD into riskier assets. Probably not Bitcoin. Let's take a look at Bitcoin. Maybe, right, so it seems like Bitcoin is holding support and it's kind of slowly moving to the upside. And this means that there's still some interest in holding Bitcoin as a risky asset because there's definitely some interest here in buying. But you can look at other risk assets like the UK 100. This is the UK stock market, right? The UK index, and you have the Japanese index, right? Giving us a long signal, moving slowly to the upside. This is the Nasdaq in the US. It's breaking through these levels, continuing to the upside. Now let's look at the S&P 500, which of course will be moving to the upside as well. As you can see right here, we are currently in a risk on. The risk assets are moving higher. What's up, guys? What's up, everyone joining? I'm tired. Sorry. All right. So the Dow Jones moving higher as well. So you'll see here that these are the risk assets. You got the DAX, the German indices, and then the European one. Everything is moving to the upside. Ethereum slowly moving to the upside. Bitcoin is slowly moving to the upside. Oil is, well, this is a complicated situation now for oil and gas as well. But those are some of the risk assets, right? And then you have some currencies which kind of follows the risk sentiment, which is AUD JPY. AUD JPY follows the risk sentiment in a sense where it's bullish in a bull market and bearish in a bear market. And you can see here that last 2 or 3 days or so, you do have. I'm just gonna open up a so I can draw on the screen here. You see, last couple of days you had. Why can I not draw on screen? That's weird. I was supposed to be able to do that. Let me just check the settings of this one right here. What's the weird? Control X should be Control X. Can I use this one? What a terrible tool. It's not working. Whatever. So that's just a quick breakdown of the current risk. Like that's the breakdown of risk on and risk off. So it's a good idea to have a good idea of what the risk sentiment is. So how do you get an idea of what the risk sentiment is? Well, first of all, you can go through the charts and look at risk assets versus risk off assets to get a feeling for what's going on. And now, of course, during the different cycles of the market, you have different themes that plays in and affects the risk sentiment. And right now we have inflation, right? So simply put, inflation going up means interest rates is going up. And I'm pretty sure that most of you know this, and most of you have an idea of all of this. And honestly, I'm not an expert at this. Like, I would consider myself, I wouldn't really consider myself an expert at anything, but I would like to believe that I'm close to becoming perhaps an expert at my trading system and my style of trading, because you can never become a technical analysis expert. I don't believe you can be a technical analysis expert, because it's such a broad theme, right? What you can become, though, is definitely an expert at a very specific trading system, because you can't become an expert at 10 different systems. Because let's say you have to spend 10,000 hours on one system, become an expert at that. Anyway, let's leave that. My focus and my expertise is trading based on technical analysis and trading one specific system, which is the RLZ slingshot system. My expertise is not macro analysis, and I'm never going to become an expert at macro analysis. However, we want to have an overview of macro. And to have an overview of macro, you don't need to be an expert, not even close, right? So what's going on right now is inflation is going up. Let me also, after this, talk about the fact that the inflation might be going down. But right now we're seeing a scenario where inflation is going up. And with inflation going up, you're going to see the Fed raise interest rates, right? Because raising interest rates is a tool that the central banks has, and a very powerful tool that the central banks has to slow down the economy. And when you're slowing down the economy, the rate of inflation should fall. So what effect does the hiking of interest rates have on trading and the markets? And why does it have that effect? Well, it's quite simple. When you have low interest rates, it costs less to borrow money. So money basically becomes cheap. So you can basically think low interest rates equals cheap money. High interest rates equals expensive money. When money is expensive, people borrow less, people buy less, and people invest less, right? There's less money going around from people putting in different products and that sort of stuff, right? So they hold their money. And when the interest rate of the USD goes up, you're going to be making more money by holding USD. And USD as the safe haven asset and the risk off asset as it is considered a safe asset in these risk off scenarios. So that's basically why the inflation story is so very important right now, and when it's why it's on everyone's mind. What we saw last week, I believe it was last week on Thursday, was the CPI numbers coming out from the US, and it's basically the inflation rate. So basically, what's the inflation in US, and what the inflation numbers showed us last week was a potential peak in inflation. And what that means is that whatever the Fed is doing, and basically they're only hiking rates, so there's not like, whatever they're doing when they're hiking the rates is working. And because it's working, they are now starting to open up to the possibility and actually having conversation about possibly slowing down the increase in interest rates. And that's why we are seeing a shift from risk off to risk on. It's that simple. It's that simple. You don't have to be an expert in macro analysis or geopoliticals to understand that this is what's happening right now, because it's so crystal clear. And whatever the Fed does, everyone else, every other central bank has to obey. US is the biggest economy in the world. The US dollar is backed by the biggest and arguably the strongest military in the world. Whatever they do, we just shut up and listen. That's just the way it is, especially in the financial markets. Any central bank that does not go down the route that the Fed has done is basically creating a much worse situation in their country. And it's I'm not going to go into details of this, but they're basically importing inflation by not following the Fed. Do you expect a slow recovery or choppy conditions for the near term? Well, what I like. So what's interesting here, and I think what would be a good approach would be to not. I can obviously give you my thoughts on this, but the bottom line, like the underlying foundation of the way I'm trading is I see a trend, I enter that trend, and I ride that trend for as long as I can. Now, that's very important to remember. Whatever the macroeconomics are telling us, I'm still going to be trading whatever trend is visible, even if it goes against the macro analysis. Now, there might be scenarios where I might not do that, but most of the time I follow technicals before I follow fundamentals. The thing is, though, that fundamentals do drive the market, and technicals will always follow fundamentals most of the time unless they're lagging. So do I expect a slow recovery or choppy conditions for I have no idea. Like I really do not know. The question now is this a bear market rally, or is this the beginning of the end of the bear market? Is this the beginning of the possible bull market? Now, this beginning might take 6 months, right? The beginning might, for example, on Bitcoin, mean that we're going to have a massive range for 6 months, maybe longer, maybe a year. But that's the beginning, right? And it has to start somewhere. Choppy conditions, we're going to have choppy conditions most likely. Is it going to be a slow recovery? Perhaps it's going to be a slow recovery if let's say, let's say that Fed, like Chairman Fed Powell, not Fed Powell, like Jerome Powell, I think it's called. If he comes out and says that they're still going to be very aggressive, like they're still going to be very aggressive. We don't care about this, fuck inflation. We're going to crash the market. If that happens, we're going to go down. We're going to go into risk off scenario. But if that happens at the same time as other Fed chairmen are talking about quite a bullish scenario, like they have done, they said, the last couple of days, we're going to have a very choppy market. So last couple of days, we had multiple Fed local presidents and chairmen say that, give us quite bullish remarks on the economy, like basically telling us that, yeah, telling us that they're probably not going to hike rates as much. But Fed, like Powell, is much more direct, much more aggressive. So we have that play of balance. And if that happens, that unbalance between the speakers, it's going to be very choppy. It's going to that's going to be very hard to trade. We want clear communication, clear directions. We want to know what they're actually thinking and what they're going to do. The problem is, though, I don't think they know what they're going to do. Like, I don't even think they have a good idea of what they want to do with this scenario. So it's very hard to think about. So with all that said, now we had a quick crash course in fundamental analysis. And what I do is I always go through the financial news site. I look at the economic calendar. One of my main source right now actually is the financial news. The Bloomberg Global Financial News Live. You can find it on Bloomberg Quick Take Originals. Like, it's really good. It's actually my main source of financial, like, macro stuff. It's actually pretty good. It's actually pretty good. So definitely recommend you check that out. I always have it on one of my monitors here, as you can see right here. proud of me. So with that said, let's obviously I can't have any sound on, so I'll have to just read lips, I guess. So with that said, let's take a quick look at the markets here, and we want to begin with the trades that we currently have open, which is a short on GBP CHF. Now, looking at GBP CHF, and we also had some news coming out of the UK. So we had unemployment change and unemployment rate. So wow, okay, so the unemployment rate was actually worse than expected. So if the unemployment rate in the UK is worse than expected, that means that the economy is potentially weakening, which we know because they talk a lot about a recession. And if they're going into a slower economy, it wouldn't make much sense to. But the economy, like the UK, is hard because it's just so, they're not having a great time over there. So let's not go into any great detail on that. I do like how these trend lines are setting up. We have our stop loss right here. TP3 has been hit. We only have 25% of the position left open. So it's not like we're, going to lose a lot of money if this stop gets taken out. And we kind of have to, when you look at this, you're like, maybe I should just exit here, maybe it's a shame I didn't get filled here. But we need to let, like I always say, we need to let all trades be given the opportunity to perform. And I do have an alert. I do have an alert down here where if price does come down here and price does, yeah, I do think that for the UK 100, strength of GBP, when we see strength from GBP, that usually does not bode well for a bullish UK 100 index, right? But it does seem like we're on our way up to test TP1. We do have a quite interesting type of price action here for the UK 100. So what I'm thinking is we're going to move the stop loss on this trade, and we're going to do that before TP1 has been hit. So why we're going to move the stop loss before TP1 has been hit? Well, you have this low right here confirmed the trade, right? So this low right here, the trade is now confirmed, right? And now we have a higher low. So we have this higher low confirming the trade, and then you have another higher low giving us basically confirming another setup. So what we can do now is we have one confirmation and then another higher low and a bounce. So one safe thing to do here is to basically move our stops here, which basically means we're almost cutting risk in half. So if we get stopped out on this one, we will only lose, just a slightly more than half an hour. Which I've talked about. You always have to let your winners run. Like never move your stop loss into profit too quickly, right? But when it comes to limiting the losses, right? And basically, when I talk about this right here, where we already are in profit, this is not about limiting losses. This is just about securing the profit that you already have and securing your unrealized profit and loss. But when it comes to this trade right here, we're making sure that we can have the winners that we have are going to be bigger than the losers, right? So it's important that the winners are bigger than the losers, so the winners pay for the losers. And if we have a couple of losers that is actually smaller than -1R, we're going to have a much easier time paying for those with the winners. So right here on UK 100, we can go into the 1 hour, and you can clearly see here that it's a very nice looking local trend here with higher highs and higher lows. Now, what would you think about this if you have a trend that kind of goes like this? So this is clear, right? But what happens if you get something like this? Well, obviously the trend is invalidated, and the first sign of this local trend being invalidated is this equal high right here, the double high. So if we create a double high here and we don't break out and we go back to entry and don't go even lower, the probability of this local trend failing and for us to break down to hit that stop loss becomes quite high. So we might just put that stop loss a little bit higher, because the probability of our original stop loss getting hit when we get closer to entry is actually quite high. So I'm going to be posting an update on this, and we're going to be moving our stops up on UK 100 after this stream. So we're going back to GBP CHF. Still safe there, because there's nothing wrong with this. It's still quite safe. I'm just, we're not going to be caring too much about this. We have stop loss is in place. Is stop loss in place? God damn it, I forgot to actually change it. Let me change that. Happy I checked that. Changing the stop loss on that one, and the next one I'm going to change that as well. Stop loss. Says I have no connection. Why do I not have any connection? All right, should be good now. All right, so let's go through some alerts here to see if we have anything interesting going on in terms of alerts. So we have GBP JPY. Now this is not that interesting, because it actually looks like a local uptrend right here. So we're going to be removing that one right here. We have Euro GBP. Interesting, definitely interesting. Now I don't like the fact that it looks like some pairs are actually performing well versus GBP. So there seems to be some weakness here from, some strength from GBP. We can look at the currency strength index, and the currency strength meter here shows us that currently the two strongest currencies are Euro and GBP. I don't know why the GBP is strong. It must have to do with the unemployment rate. Now I haven't gone into detail on that, on why it's like that or anything like that, but and I don't really care that much. But if I had the time, I would perhaps go into that. And if the scenario for a strong GBP is very, very clear based on the news, it might make sense to exit the trade. But I'm not going to do that at this point. I'm going to wait, because I'm not really sure about that. I'm just not sure about that logic yet. And we have a level right there. So we have a pretty decent. We do have a pretty decent level right here. It's confluent with a horizontal level. It's confluent with the just give me a second here. Somebody's calling me. I gotta send the text. So it's a pretty good level, and so I'm just keeping the stop loss right there. Now let's go back to the alerts right here. Euro GBP. We kind of have to It does look interesting, so we're gonna put that up. The Nike did give us a pretty decent long signal right here, but the retrace here happened way too high, right? So if you're looking at the 4 hour, you want to have the fibs down here, and then it didn't come as far down as we wanted. We wanted to at least hit the 50 or the 618 or something like that. If you go into the 1 hour, there's not even a good fib on the 1 hour, so there's nothing here on the Nike. Euro USD, I mean, we still see something here. We still have our eyes on this idea right here for something to happen. And Euro CAD is absolutely breaking out here. So here we would like to see a long. I mean, look at this trend. It's absolutely beautiful. We want to long this somewhere, but I'm not sure why. So I'm just going to keep this on the list and keep monitoring this one, moving this one up to the first one. So let's go through this list once again. Euro GBP, Euro CAD. Do we have anything of interest right this very moment? And so I'm going to go through this list quickly, and then I'm going to go through. Let's take a quick look at all coins. I like silver. I like most of the indices. Like definitely some strong price action here today. It's very, it can be very frustrating at times, you know. Can be very frustrating at times when you see a lot of potential. You see a lot of potential for good trades, but you have to always remember that it's all about having that the right mentality and having the right mental approach, and really, you know, being calm, balanced, and patient. We see a lot of interesting stuff going on right here. Well, that's unfortunate, but whatever. Yeah, lots of interesting stuff right here, but nothing that kind of confirms right at this very moment. Bitcoin moving highly, slightly higher. Euro USD is very, very strong. All right, so nothing right now. Let's take a look at some altcoins. Right, so you're looking at shorting Matic. Now the problem with, I think for me right now, I think we're in a scenario where there's not going to be any trades on crypto, because if you isolate crypto, and you forget about the inflation story and all of that, then shorting crypto makes 100% sense with FTX drama and everything like that. And if something else comes out, another, you know, institution or whatever comes out and says, you know, they're bankrupt because of FTX, we're going to see crypto move even lower. So at that point, it makes sense to short Bitcoin and short altcoins, like way down. But does it make sense when you think about the inflation story, you know, about all of that? Not at all. Like, we're in a risk on scenario right now. You look at the dollar currency index. This is Bitcoin's time to shine, which is fucked up considering we would be trading so much higher if it weren't for the FTX drama. So you can look at this from a positive perspective. I know probably a lot of you are watching or lost money on that, so there's nothing positive about that. But if you could try to envision yourself seeing this from, you know, positive perspective, which I know is very, very hard if you lost a lot of money, which is the absolutely terrible thing that could happen. Everything's setting up for a bull market, right? So everything is actually setting up for a bull market in global markets, which should also help Bitcoin recover. So these levels for Bitcoin, I believe, are really good levels to stop buying Bitcoin, right? and of course all the way down here, just absolutely like this. If you manage to fill a bag of Bitcoin down around this area, I mean, imagine you're gonna have a very good, very good long-term bag, right? For some reason, it's much easier buying up here. For some reason, psychologically, it's much easier to buy at all-time highs. But now we're down here and we're like, you know, maybe I'm gonna stop buying at $10. Like, it's, you just want price to go lower. But up here, like, oh fuck yeah, I'm just gonna get on the bull run train and make a lot of money, and you buy the top. Like, you have to look at the price, look at the structure, and look at the chart, and be like, where is, if I were ready to buy Bitcoin at $60,000, why am I not ready to buy Bitcoin here? Well, the answer is, it's much easier to buy something as an investment that is going up in value, because you buy it and you think that it's going to go up in value because it's going up in value, and it's been going up in value for the last 12 months. When something is getting cheaper and cheaper and cheaper, you're thinking, well, I don't want to buy this because I'm losing money. If I buy this, now I'm going to be losing money. The price goes down. Well, at some point, it's going to go up, right? So you're going to ask yourself, are you going to wait till price starts going up? Or are you going to buy at, quote unquote, a discount? Now, I don't believe there's a discount in the markets, but what I'm saying here is there's a middle line here between buying the top and trying to time the bottom, and that is dollar cost average, right? So you go into Bitcoin, let's say once every week or once every month or once every day, whatever, with a small amount, right? With a small amount, and what you have to do is you have to calculate, right? You have to calculate your risk somewhat. So if you buy at so let's say you do start to buy here. Now you have to take into consideration the possibility of Bitcoin dropping down here. That's a 41% move to the downside. So you have to kind of try to calculate, would you be okay with losing 40%? If you enter with 100% of your desired position, would you be okay with losing 40%? Of course not. Of course not. So lower that amount, and buy on the way to the downside, and calculate what your max position would be at these prices. And when you hit that max position, you stop buying, and then you continue buying when prices goes lower, so that you try to calculate if your average entry price would be I don't know, 14K. So if your average buy price of Bitcoin would be 14K, how much would you lose if price goes down here? That's a 26% 26% loss, right? And even if it goes lower, and I would never recommend that you enter, with 100% of your desired position on the way down. However, you could start building a position, a small position, so that you would only lose, I don't know, 5 or 10% of that position, not your trading capital, but 5% or 10% of that position if Bitcoin just drops way lower. And what you can do then is, if you see something like this, right? Well, when you have this type of price action right here, and this is on the weekly, so it's going to take a long time. But when you have this type of price action, now you have your average entry around here, and you're okay with Bitcoin dropping maybe even down here. But when you have this price structure right here and you reclaim this level, that's where you can enter with everything else, with everything that you did not enter here, because now obviously it kind of looks like the market structure has confirmed that we have a bullish break in market structure, and this is most likely where you're going to have the bull market. And that's my idea. That's my plan. It's been my plan for quite some time. I started buying Bitcoin when we broke below 20K. So here, right? That's when I started accumulating Bitcoin. I've been accumulating Bitcoin here, and I'm obviously going to continue accumulating Bitcoin with the risk management. And my time horizon for that is like that position. My time horizon for that would be anywhere between like 1 and 5 years, right? So I'm okay with us entering a bear market for the next 2 years. I'm okay if we don't go to all-time highs within 5 years, or maybe even 10 years. Probably not 10 years, but within 5 years, I'm okay with that. So I'm okay with sitting in that position, which means that, of course, I'm not going to enter with everything right now, because I run the risk of losing 50 or 60% of that position, which is just stupid. So yeah, that's I think that's it for today. So today we've discussed just a breakdown of how what type of entry level overview fundamental analysis I do to get a feeling for the risk sentiment, and that feeling and that risk sentiment might influence me to take trading decisions. Like, for example, if I had more information on this move on GBP, I might have taken the decision to exit this one, but I'm not going to be exiting this one now with just a feeling and a thought about something. Like, I need facts, right? And right now the only fact I have is price action. The price action is telling me that just stay in. If you get stopped out, that's okay. And we scanned the markets, and we didn't really find much in terms of setups right now. We are going to move this stop here, because if GBP is pumps, this one is probably going to dump, and we want to get out at a lower risk. And then, of course, Bitcoin. I think now is a great time to start planning for a possible long-term bag of Bitcoin, to really start accumulating that bag. And for the love of God, take your coins out of the exchanges. If you buy Bitcoin on whatever exchange, you take that into a hardware wallet. You do not keep anything in terms of spot holdings on any exchange. The only exchange that I'm using is PrimeXBT. I have my USDT that I'm trading on PrimeXBT, and that's it. Everything else is in hardware wallets, and I basically only hold Ethereum and Bitcoin, is very small amount on other shit coins that I used to have because they're down so much. I could I just keep them. And as members of the community, remember that um, in the exclusive offers channel, I have a link to a Google form. So if you don't have an account on PrimeXBT, you can go to that channel, fill out all the informations in the Google form, and once Hercules is back, he will add 1 week to your subscription. Well, I don't use stop orders for long-term DCA, because I have all my Bitcoin on hardware wallets, and you can't really have stop losses on, because it's spot holdings, right? But you can have alerts, right? You can have alerts and mental stop losses. You can have alerts on TradingView that says like, now it's time to start thinking about selling your spot position. But that's more based on market structure and price action. If I don't see the reaction that I want at support, and we have continuation of a bearish market. But at this point, though, I would say, somewhere you kind of have to accept the fact that the money you put into Bitcoin now, you need to be able to lose a lot of that money. You need to be able to take a high risk, right? Because crypto is not looking fine, So you'll have to, whatever money you put in Bitcoin or Ethereum, you have to view that money as not gone, but it should not affect you catastrophically financially if it goes to, I don't know, 4,000 or whatever. If that's the case, you're in with too much. Now in the bull market, it's much different, because in a bull market you can go in with size, because it's very easy to exit in a bull market. You exit when there's like just a slight clue of a change in market structure. When the structure breaks, you can exit, right, and you can take profit on the way up. So it's much different in a in a downwards trending market, in a downtrend. It's different, because if you buy spot holdings on Bitcoin and you move it to your hardware wallet and price just goes down, obviously not the same thing, very much harder to monitor. All right, guys, that's it for today. I'll see you guys later for some more updates. Take care. Thanks for joining. Great to see you all in here, and especially good to see you guys in here live and asking questions. All right, take care.